My name is Jovanny Orozco, calling from San Pedro, California. 24 years old. Yeah, I'm an independent contractor, so I do like DoorDash, Amazon Flex, what I do for the most part.
Awesome. How long have you lived in California for?
My entire life, I did live in Nevada when I went to UNLV for like 3 months. It was like a winter session. It was like 2 years ago. I came back. I didn't really like Vegas like that.
Was UNLV, you only went there for a few months? Is that the only college education you have, or did you go longer?
I originally graduated from Compton College and I was at Cal State Long Beach. The only thing that led me out there was because financial aid had sent me a letter saying that they would no longer provide funds, and I was confused. It was a whole bunch of fraud situation that went on. So I went to UNLV because they offered a scholarship. So it was cool, but it was not what I expected as far as like the campus and how like certain teachers were. It wasn't the best experience. So then I ended up coming back and I went to El Camino College. I had to restart and figure out my financial aid situation. It was only until like I want to say last year is when I found out that the letter that they sent and the email that they sent was not real. It wasn't a real thing, but I found out through another university that I was going to attend. It was like an online university. I think it's called DeVry. And they had let me know that I still had 2 years of financial aid. So whatever CSULB had told me, it was a big lie. So I was like, wow, like I could have finished. I could have been done, but it's all right.
Are you thinking about going back now and finishing your degree, or where's your head on that right now?
Well, I have my associates. As far as like work and anything, I'm able to get any type of work with that. I was an accountant for a testing lab company, in Orange County, and I was doing that for a bit. But I like the free work, freelance. Sometimes it's better to do that because living in California and just overall in Los Angeles, there's a lot of opportunities that come up. So it's like I like to kind of have that freedom in a sense. So for as far as education, not just yet. It's not gonna go anywhere. So it's things have been going pretty smooth. So when I have a little bit more time and focus up on it, then I'll probably do that because I did school for like.
Makes sense. So how long ago, I guess, did you said you had an accounting you're an accountant for a testing lab in California. How long ago was that, and what were you making at the time?
So I was just it's funny that it was a funny little story. I was delivering some packages to them, and I just asked because I was like, it looked pretty cool. The whole entire facility, and it was very much hidden. It was last year May. I worked there for about a few months because it was more so like they needed an accountant for an assignment. It was just for a period of time, and then they're like condensing their workforce. So they just needed some extra help, and then they were just condensing it and then just getting rid of the extra because there was a lot of layoffs that year, and it wasn't crazy much because they were just starting me out. So I believe it was 20 or 21, I can't remember. It was
21 an hour. Okay, so about $40,000 a year on a gross salary income. And then after that gig ended for a few months, is that when you started doing more freelance work, DoorDash type of opportunities?
Yeah, I've always been doing that. I've been doing like writing as well for people, so I would charge for that as well. So like any little thing in LA that's going on. Like sometimes you could host events on the weekends for some people that some promoters, and so honestly, whatever that pops up is probably like the best thing.
Let's dive into, I guess, your current job doing freelance. You're doing DoorDash, doing these other type of event stuff. What's your typical week look like? How many hours a week are you working?
Now my situation changed a little bit. Before it was I'd be working every day, doing Amazon Flex. So it would be from morning all the way until the evening, probably like around 6, 7. Head towards the gym. Sometimes there's opportunities that do come up throughout the week. Like I've been doing extra work like acting. Sometimes those arise throughout the weeks. Like, oh, all right, boom. I could just drive to it, have that gig going on. So sometimes just things come up, and I just like, all right, cool. So
And what's your average income on a weekly basis, or I guess we'll go a monthly basis, with these different freelance gig opportunities?
sometimes there's slow months, sometimes there's better months than usual, but it's not too crazy. So sometimes it could range from 3 to 4K, which is not too much, being that it's in LA because that's pretty kind of low. a little bit low.
And is that prior to, are you setting aside taxes out of that, or is that prior to accounting for taxes?
So that's like gross. But with
That's
taxes,
gross.
at the end of the year, because I do the independent contractor work, so like the DoorDash and Amazon, I'm able to write off like the mileage and try to get some back. This was the first year I did have to pay though.
Yeah. Obviously, I guess with those, I'm not too familiar. I'm not an accountant with. Obviously, you can write off some different gas and some different things with DoorDash and those types of gigs, but still smart to set aside probably 20% of that gross pay to make sure that you are able to have foot a tax bill and stuff at the end of the year when you have those opportunities or when you start filing your taxes. What's your current expenses look like outside of that? I know you sent that over. It looks like your rent is only $300 a month right now. Are you living with roommates right now?
So, I had a little situation going on, prior. I just came back to my parents. I wasn't living here for a while. So it was more so like to help me get on my feet so they're not charging me a big amount. But my expenses, it was really coming from the car, like driving. So it's like a lot of the wear and tear, but majority of it was like gas and food. Food was really like an expense because I'm on the road all day, so I wasn't really home as much to cook. Man, it was for gas. I always put gas like every 2 days. That'd be about 20 to 40 depending on how much I drove the day prior. So it'd be like 20, 40 a day, and that's like weekly, and then it turns into like a lot week.
Yeah, definitely driving a lot. And I mean, between your car insurance, car payment, gas, it looks like you spend about $1,000 a month between those three things for what you're currently doing.
Yeah, the only subscription that I've had, it's like it's this service that helps me get more shifts for either DoorDash or just any orders come up because sometimes I'll deliver medicine as well. Yeah, so it just helps because a lot of drivers use them. Every driver uses them, not a lot. Every driver uses them because otherwise we wouldn't be able to get work.
I have to figure out more ways to get more work, to have more opportunities with those different gigs, since there's a lot of people that are doing them. So let's dive into your childhood. What was your childhood like growing up in California? How did your parents approach money?
So I grew up in multiple households. So I kind of learned a little bit from just every household I've been in. But as far as with my parents, it was just it wasn't really touched on. If I could be real honest with you, I would just be able to see that like sometimes money was really a big issue. I really wasn't aware about saving, or just I wasn't aware about credit growing up, and just even with like my siblings, because they started off their families pretty young, so they had to move out and then start out, fresh. So a lot of that didn't really come into light once I entered high school. It wasn't really too many people that had put me onto that information growing up, but it was just like I visibly see like, okay, like putting money away, but I didn't really know, entirely what. I thought it was just rent money or if it was just their savings. I wasn't sure until I got to high school, was when one of my teachers, I think it was a government class, and he always talked about saving and investing. So that's where I kind of started to learn a little bit. I didn't even know too much about credit. I didn't know what credit was. I thought when people talked about credit, they're talking specifically about credit cards. So I'm like, oh, I'll never get a credit card because people always talk about they're in debt and they're still in debt years later. And so I was like, oh, I'll never get one. But then once I graduated high school is when I had to kind of like learn, because you're not anybody in this world, especially in the U.S., if you don't have a credit profile. That's when I took out my first credit card and just bought some cologne and then just started paying off. But I still didn't know too much about it then.
I would disagree with the statement that you're not anybody without credit. I do think there are benefits of credit when you're going to buy a house and get lower interest rates, but a lot of people try to focus too much on their credit, and that can, by opening up different lines of credit, and that can just lead them to a bad cycle of spending more money than they have, or taking out loans that they don't need, whether it's a car loan, whether it's buying more house than they can afford, or open up credit cards that they end up not being able to pay off every single month. I do think if you have a credit card and you pay it off every single month, then you're in a great spot. I would never suggest to not pay your credit card off in full every single month. But I don't think that credit has to be the end all be all. Really, in my eyes, it's only applicable if you're trying to buy a house and it helps you get a lower interest rate, but also you can get a house without any credit at all. I know people who have no credit cards, have debit cards only, and you can still get approved for a mortgage without any credit at all because they have proof of income and they have no lines of credit at all. So I'm anti when it comes to like pulling out lines of credit just to build your credit up. But I do think it can be very helpful when you're buying a house, and if you're above a 750, you can get a lower interest rate than someone that has a 600 credit score. So when it comes to, we'll go into that, I guess, now with debt. What was your experience, I guess, when you first opened that credit card? Were you paying off in full every single month? And have you done that since, or have you found yourself in any credit card debt since you first opened your first credit card?
So when I first started out, I was paying everything off. Like I was on top of it. My dad at that point was kind of like, "Oh, you have to pay it on time." And so there was at one point where I was looking for cars. We just went shopping around. I didn't get any cars that year, but we just went shopping around, and some of the dealers was just like, they kind of mentioned it like, "Oh, when you're paying, pay a little bit more before the date." And so that's in my head. That's what I knew. So, okay, so I was just doing that. I wasn't in debt. I was fine. And when I would pay everything off, I would try to get a credit increase because I heard that helps. Boom, it was fine. It was my first credit card, no biggie. And then once I started school, Discover has that student credit card, I believe. So then I had started with them, and then it wasn't really anything where I had to like pay anything back. Whereas like the other one was like a store credit. So like I bought something to get it going, and then I'd pay it off. With the Discover one was just like a everyday, like use that instead of your debit card. So that's what I was doing. I did things that I didn't know could affect your credit. Like you shouldn't put revolving payments, like paying your insurance or stuff like that. I still don't know too much. I've been learning. But yeah, that's what I was told later on, that you're not really supposed to put any revolving payments like that. It just shows the credit company that you need them, when in reality you shouldn't be giving that off, where you should just use it and then pay it off like in the next few days. So I wasn't really too much in debt, at least just yet. And it was not until I got my first car, that's when it was like, okay, like if you could call that debt, yeah. But I was paying it off, everything was fine. And then COVID hit, and it's kind of like things went crazy for a bit. Things started to get a little out of hand. Work slowed down. I got furloughed from one of my jobs, and then the other job I was at Amazon, and I was at Dick's Sporting Goods. Dick's Sporting Goods furloughed all their employees, but the salary ones. So I was out of luck with that one. Amazon, it was what Amazon does. They have an Amazon a flex program. So this one's different from so their flex program is you're able to have a flexible work environment. So if you want to work on Monday and not work for the rest of the month, you could do that. They only required you to work about 3 times out of the month, but they changed it to once. So it was like, okay, so you could be kind of lenient with your work schedule, but they would drop work shifts once at the end of the week. So it's like everybody's trying to fish the 20 shifts that was open. So once really work started to slow up is when I kind of started using a little bit more. And then like, okay, like I'm gonna pay it by the next one. So sometimes I wouldn't have all the money paid off. It would probably be like half. So then at that point is when it kind of started to build up. Once I moved out from here, I was living with an aunt, and I was paying more rent, which is I was fine at the time. I had ended up investing some money that I had saved up, and I hit pretty good on it was on Doge and on Tesla. So yeah.
Never a good story when you start with that.
Nah, but I did pretty good. I'm not even gonna lie to you. I when it hit 80 cents, I was like, oh, it might go to $1, and I had dropped 3,000 on that. But see, the way that started was I took out a loan to do that.
No, you can't do that. You can't take out a loan to go invest in Dogecoin or Tesla.
But see, the thing is that I noticed that a lot of there's somebody I have met, I can't remember, but they had said that rich people don't use their money; they use other people's money. So I kind of took that.
I can sure as hell tell you they don't take out loans to go put all in Dogecoin and Tesla. I can promise you they don't do that.
Yeah, so
People do take out debt to buy stable commercial or residential properties, multifamily properties, and use a bank loan for that. But they don't take out money and say, hey, I'm going to YOLO it into Dogecoin and hope I get 100x on it.
my mindset was like, well, sometimes you take risk. I was like, I kind of went in with a plan, like, all right, once it hits a certain amount, I'm gonna get out, and I did.
Did you get out?
I did. So once it hit 80 cents, I was like, it might go a little bit up, but once it flinched to 76 cents is when I pulled. So I had profited like a little over 5, under 6K. So I was like, all right, cool. I was like, boom, I could do this real quick. So I was like, I could pay off the loan just yet, or I could just keep keep doing that. And I was like, I'll continue to pay it because it's like it looks good on my end. So I was like, all right, cool.
Wait, so you made 6 grand or 5 grand off of Dogecoin and Tesla, and did
No,
you pay the?
so I didn't get into the Tesla yet. It was first Doge.
So you made 5 grand on Doge, and
Yeah.
then what happened?
That's when I heard. Well, I'm a business major, so I'm kind of really into a lot of this boring stuff that sometimes people don't like. So I read. It was like a few months before they had really. I guess you could say it was to the public because it was like it was somewhere where I had seen. I can't remember where, but it was saying there was gonna be a Tesla split, like the stock split, and then there was gonna be an Amazon stock split, like around the same time. So I'm just like, no way. I was like, who? Okay, so I'll drop some money on that. And then I ended up doing like 1,000 each, and then I think I went more into. I think I had dropped about 2 more thousand into Tesla, and I just left 1,000 in Amazon. So I was like, all right, cool. Like I'm not even gonna worry about that. Like it'll go up.
Can we one thing when it comes to stock splits, just because I want to just clarify there. When a stock splits its price, you don't actually own more Teslas. Like the price is actually cut in half. Your ownership just gets diluted. So like if you have say $1,000 or one share of Amazon and it's worth, we'll call it just plain and easy 1%. And they do a stock split, so it goes from $1,000 to $200. Instead of having 1% ownership, each share is now worth 0.2% ownership, and it's worth $200. So when a stock splits, it doesn't actually give you more ownership or a cheaper buy-in for that company because you can buy fractional shares these days. It just appears to the public that, oh, Amazon stock is now $100 versus it was $3,000 last year. People see that and like, oh, it's cheaper, when in reality it's the exact same. It's just cut down in fractions.
So when I put in the amount of like what the original stock price was, keeping in mind that like, okay, how you mentioned people will see that it's cheaper, so then they'll put a lot more into it. So once that fractional share spikes up or the split spikes up, it's like, okay, I'll profit more because people are gonna see that, oh, it's worth 100 right now, we could buy into it, because that's what they do with stock split. You get more of the like I guess
It looks better for them. People are like, oh, it's cheaper to get an Amazon, when in reality it's the same.
yeah. So that helped out in like the weeks to come is when it's like, ooh, it went up a little bit. So I was like, oh, I was like, damn, I'm doing this pretty good. And so with Tesla, I ended up, it's rough estimates right now. The Doge one for sure. I knew that one because that was the first time I was like, yo, like it just, I just made 5 G's. But with Tesla, it was around, it was honestly, they were all kind of around the same area. So did I have that pulled up? So it's just a rough estimate.
Ballpark.
It would range from 8 to 9 thousand off of Tesla, and so I ended up pulling that out, and then I was like, okay, cool. So I was like, all right, I'm gonna put 1 more thousand into Amazon because they already had moved up a little bit, but not crazy much, not until later on. And then I was like, okay, like I need to diversify. So I started putting into other companies that I looked into, and I just let them sit there. I was like, okay, I'll do the long term thing. So I let them sit, and then I was like, okay. So I was always into like crypto, like because I thought it was pretty cool at first. It was my first year in college when I found out about Bitcoin, and I found out about Bitcoin in high school, but I thought it was just like I didn't know what it was. So I thought it was like a scam. It was until like one of my fave rappers talked about him, and he was talking about a certain coin, and then he mentioned Bitcoin, and I was like, huh, okay, maybe I should look into this. So then I looked into it, and then I hear Warren Buffett talking smack about it. So I was like, okay, it must be something. And so that's when I was like, okay, maybe I could try this. But I was like, Bitcoin's too high. Like if I were to put $100, it would take forever for that to double. So I was like, let me look into other things. And oh my God, it was crazy at that time. Dogecoin was but oh my God, well below the home. It was just well below. I have found out about it because there was this ad, like a scam ad that mentioned like, oh, like just explaining how you could become a millionaire overnight, one of those. And they had mentioned Doge, and oh man, at that time it would have been great to put into it. But I didn't see no potential because I didn't really know too much about crypto and what it could do. And so I ended up putting the 100 into, I think it was Ethereum Classic at the time, and then I put it in, and I switched it into Litecoin, and then it went up to 1,000. And I remember showing my dad, he's like, that's not real. I ended up like, okay, like I didn't really worry too much about crypto that year. But then when I went back later on, I heard about Shiba, and then how that buzz, I dropped some money in that, and then I ended up making up 11K. And then with Shiba, after Shiba, I started just doing trading off my phone. I would just do like buy in, and once it spikes up, pull out. I noticed that like the market with the crypto market during that time, it would kind of fluctuate around 3 in the morning. And then for all the way up until probably like 8 or 9 is when I'll be doing all that through my phone. I didn't profit crazy much, but $50 is a win, $100 is a win, $200 is a win. The most I ever made in 30 minutes was 1,200. So I was like, okay, like this is pretty cool.
One, for anyone watching, don't do this. If you sit here and try to day trade crypto, you will lose a lot more than not.
Yeah.
You can make money. Some people can, but a lot of people lose a lot of money. I mean, Dogecoin, if you bought in with all the hype at above 50 cents, I mean, it's below 10 cents right now, so you're down 80%.
This is not financial advice.
Please do not sit here and day trade crypto, especially if you have debt or whatever. It's just, if you want to put a couple $100 here and there into cryptocurrencies and Bitcoin or Ethereum, then you have the intent that it could be worth zero one day. Do it. It might go up. I'm not a crypto expert, so but I can also sit here and tell you that 9 out of 10 people that try to day trade crypto will lose money. So I know friends have done it. Plenty of friends have done it, and I know people have made money, and I know people have lost a lot of money. So it's not a consistent, safe investment. So the question is, so you made 5K off Dogecoin, you made 8 to 9,000 off Tesla, and you made 11,000 off Shiba. What'd you do with that money? Where is it? Do you still have it, or did you lose it trading? Do you have it now? Where is it now?
So I was aware that the IRS is going to take about half. So there's quite a few other cryptos that I did make bread off of, but I also I was like, I have to make losses. Like I have to make a loss, otherwise the IRS is gonna.
That doesn't make. Yes, the IRS wants their taxes for your gains. But you make $10,000 and you say, "Oh, I'm just going to lose $9,000 so that I only make $1,000 and the IRS doesn't get their money." Well, you just lost $9,000 out of your pocket. I mean, you would have had $6,000 after taxes, but now you have $1,000 after taxes versus $6,000.
So I was like, okay, I need to maximize as much as I can. So like with the small trading, whether it was like small profit, I would just stack that up and then I would put it into. There were certain it was like staking. It was like a new thing, right? So I put it into staking. So I left it. Once it would accumulate to like a cool amount, is when I was like, all right, I'll switch it over into something more stable. So it would either be the one thing that was more stable for me at that time was Bitcoin Cash. So I'll leave it in there. So it'll go up and down a little bit. Nothing too crazy at that time. In my mindset, I was just like, okay, like I do have to make a loss. So adding
No,
up,
you don't. Take your gains and pay taxes on it.
I know, but see, the thing is, I ended up making over $20,000 in losses. I didn't have to owe no taxes, so I was completely fine with that. But I have like when I tell you,
if you took $20,000 in losses, then you're losing $20,000 out of your pocket, though.
I did, but I still made more than I lost. So
Then you still have to pay taxes on the gains, though. But if you made say $50,000, decided to make trades, so you lost $50,000, so your net gain is zero. You didn't make $0, and
I was going off of what I thought I knew, what sounded right, honestly. I didn't really know.
Would you change it going back? Would you have just take your gains, pay your taxes, and kept the money, or do you think your strategy actually worked out for you in the end?
It worked out because this year I got hit with, I got charged with, I owe 5,000.
Good, because you made money.
Yeah, but see that
if you're owing taxes, yes, there's ways people would do stuff with real estate, with different deductions, stuff that they can deduct their cost segregation basis with real estate or whatever to kind of minimize their taxes. But if you make $100,000 trading, you make $50,000 worth of trading, stocks, crypto, whatever it might be, you should be happy with that money and pay taxes on it, not try to take losses on your trades to minimize what you pay to the IRS, but also minimizes what you put in your own pocket.
Man, I just went off of just like, okay, what I felt was right.
Do you feel like that's right still? Do you feel like that's right still?
Honestly, if I look back at it, I don't want to say like I would have done anything more different. I probably would have been maybe a little bit smarter when it comes to like using the money, but I didn't really use the money for anything other than rent and food and paying my car note and my insurance. And I was doing I had took some classes for notary, and I was trying to get my notary license, and I was trying to pursue my real estate I was trying to get my real estate license as well, so I paid for things like that. So I didn't really blow it on anything. It was mainly money and food and rent, my car note, and liabilities.
So what happened with the loan you took out for this initially? Did you pay that off?
I was paying it off, and I'm home alone. I became homeless for a bit, so things didn't work out with the fam. So I was like kind of in and out of like friends, and then just like in my car for a bit. So that happened for like about about 7 months. It was last year. And so work for Amazon, man, it was just slow. It was probably by like the slowest I've ever came across. It was really slow. So okay, I was like, all right. It was I was using a lot of that money just just paying like my car note and my insurance and then my phone bill, like little things that I had. And I was, since I didn't have really any place to stay, I was paying for a gym membership. So kind of just use work out, but like also shower there. So like a lot of things really came out of pocket, and then things happened with the car. Like you got to get new tires, new brakes, and then like my windshield had cracked. So it was like expense after expense after expense. So eventually, a lot of that money dried up. I only had about 10 G's left. And so when I did stay with certain fam, I did rent for a little bit. They wouldn't charge too much, but it added up. It was kind of hard to save throughout the whole entire thing. And then I was also paying for storage to have my things. Cause like I didn't want to have it in my car. I was still working on my car. So I was like, so I was paying for that monthly too. So it kind of like I hopped from different storage units because some of them, I try to see what was better. And at first the price would be fine until like I think like after is when that promotional period goes away, and then it's
The
like,
jack of
oh
the rates.
yeah, and it was like, what, $300 for this small thing? I was like, nah, I gotta go somewhere else. So finally I had found a good one, and I was like, okay. So it was just, there was a lot of things that were coming out of pocket and a lot of unprecedented events that led to me like using that. I wasn't always like a big spender on just material things. Like I'm not really like that. It's more so like if I could pay for certain things that will benefit me as far as like learning more. So that's why like the notary and the real estate thing, I paid for those things. And so yeah, it really burned up. I was going through that little period in my life.
Yeah, I mean, understandable. I mean, going from making a lot of money in crypto and everything else, and then living out of your car for 7 months, and that's not easy. Living on families' couches here and there, and
No, not family. It was friends. It was like
friends' couches.
friends. No,
Yeah,
no fam of mine. There was only one family member. There's just one family member. But a lot of them like are fam. Like you consider them family friends.
yeah. I mean, that can't be easy. I can see living in California how that money can go quickly. And
Very much.
let's go back. Talk about the car debt.
Yeah.
Let's talk about the car loan. When did you buy that, and how much did you finance on that?
Okay, so I don't have that car no more. Like literally 2 days
Okay.
ago, I didn't know about car leases. I didn't know there's such thing as bad leases and good leases, and they didn't fill me in with nothing at the start, and that's why I was like, I don't know. I'm still trying to figure out what I could do in terms of like, I don't know. I'm just trying to figure some things out. I bought that car in 2020. My credit was fine. I had like a pretty high credit, and that was just because of the little amounts of times, and I had paid off another credit card because it was to fix a car, and I was like, I had the money, so I paid that right after. So it was in 2020. It was a Mazda 6, and so I go to Mazda, and they pushed me more into a lease. Whereas financing, because what they told me about financing, they're like, oh yeah, like your interest rate will be a lot higher. Whereas leasing, you don't pay any interest. I'm like, okay, that sounds good. Like I'd rather do that, because then they're like, after the 3 years, you can keep the car, or if you want to keep it after 2 years. They didn't tell me about a
You have to
buyout
buy it.
fee. Yeah, they didn't tell me about no buyout fee and that they're gonna rerun my credit again. And so
The car salesman can be sneaky. They can be
no,
sneaky on
no,
you.
hell yeah, they are. I was like, I'm not mad about it. I see it as like a learning lesson, and we go from there. So it's like, it already happened. You can't really get mad about things that it already happened. Like it was already happening to me. I found out way later. I really found out like a few days ago about a bad lease and a good lease. I didn't really know. And so I had dropped like I think 3,000 because I had sold my coupe prior to that. It was like this little beat up thing, but I was able to make that same money back that I bought it from, and then I had like a little bit saved up. So I dropped 3,000 on it, and my payment was 409. So I was like, all right, cool. Like I was fine. Like I was working a lot, and Sporting Goods had just took me back. I had just finished picking up work from the post office, so I was fine. So I was like, all right, cool. So then everything was fine. Everything went smooth until leading up to like my little situation. That's when it was like, oh man, like knowing what I know now as far as buyout and they're gonna run your credit again and all this other stuff, I don't think I would have done a lease. For sure I would have done a lease, because having the credit score that I had at the time, which was at a 750, no, 740, yeah, between 740 and 750, I would have just done the financing. It would have still been like around the same. I just didn't want to pay too much. And so yeah, I kind of got ran through. It was like 14,000 down the drain now that I now wasn't able to keep the car.
And when did the car lease end? Was that recently?
So the car lease was ending in August. But yeah, so because I do, delivery, I put a lot of miles into it. Another thing too, they didn't tell me about the mileage. They didn't tell me about
Your limits. You have to pay more if you put more miles on it.
See, what they told me was like, if you're gonna keep the car, the mileage doesn't matter. So that's all they said. They didn't tell me about whatever they said. They did mention like, oh, like you'll have 30,000, right, to use. But they said if you're gonna keep it, it doesn't matter. And they said if you want to pay like a little extra, we can add to that mileage. So I was like, all right, yeah, like that's fine with me. Like, all right, whatever benefits me most. Finding out it was all a lie. It didn't matter. It kind of it sucked, because it's like 14,000 down the drain. 14,000 down the drain. So it's all right. But we go from there.
So what are you driving now? That car's out of the picture now?
This was literally a few days ago. Literally just
Days
happened.
ago?
Literally just happened. And so right now I don't have nothing. A lot of work that I've done and can do is online. So we're gonna go from there. They haven't sent me a check yet, but it's only like I'm only gonna get $800 back from that sale, because I guess my buyout fee was 18,000, and so they were offering. I wanted 20, but they gave me 1916. At first they were trying to lowball me, and I was like, I'm not playing with you guys. I'm not gonna sit here and go back and forth. I said 20. I left. The guy said he called me up and said we could do 19,600. So I was like, that was literally the only place that was the time of day. The only place. Everybody else was like, no, we can't do Mazda. But the one thing about that year, those Mazdas, they were the leasing company was Toyota Finances. People hear Toyota Finances or Toyota Financial, they don't want to do that business, because a lot of car companies have made it hard for companies to buy out leases. But there's another, I think it's called like Southeast or Southwest Toyota Finance, which is completely different from Toyota Finance. It's a lot, you can't buy out the lease from Southwest Toyota, but you could do that for Toyota. So a lot of these dealers, they would hear that and think it's that leasing company, like, oh yeah, we can't do it with them. But I really had to explain to a bunch of them that it's Toyota Finances.
Did you got another car dealer to buy the lease out from you, essentially?
Yeah, and they
they're paying you $800 for buying that lease out, essentially.
Yeah, 888. Yeah.
And so what's your plan now moving forward? You have no car, should be getting $800. What's your plan now moving forward?
Well, just to stack up some bread real quick, like I could do a lot of work from home stuff. By the end of the week, I should have at least like quite a few G's to come up with. But I think this time I kind of want to do a motorcycle. It's a lot more cheaper.
How are you going to do, I guess my question, two things. One, I'm anti-car loans completely. My take is like, get as much cash as possible and get a small beater of a car. It's not going to be the prettiest thing on the block, but it's going to get you from point A to point B, and needs to be good gas mileage if you're still doing these different Amazon delivery and DoorDash things. But you do a motorcycle, I feel like it's going to prevent you a lot from doing all these kind of gig work opportunities.
Well, it will only prevent, not DoorDash, it'll only prevent Amazon. Not even the medicine thing was a big thing, because they would give me a little thing. But I'm not worried. I'm not really too worried about that. My main liability was that car. And I got that car because the car prior to that was like a little beater. It was a coupe. It was it was a Nissan Altima 2008, one or the other. And the transmission with those cars, like eventually they get shut. And so it was already happening, messing up. So I had to sell it. I dealt with so many used cars before, all throughout college and in high school. It took out so much money from me, so much. So I kind of needed the new car, and I was planning to keep it. But knowing what I know now, I would have financed. But it's all good. If I do plan on getting a motorcycle, it's not really going to be too much of a biggie for me, like when it comes to Amazon, because that car was my main liability, and so
I mean,
that kind
that thing was taking up over $400 your monthly budget for that alone, so it's definitely not cheap. Motorcycles, I mean, that's frankly driving a motorcycle in California seems not the best with all the traffic and cars, and not the safest route to go out there. So I would say try to find the cheapest Toyota Camry or Toyota Corolla or something that's has high mileage, is an old car. I mean, I drive a 16-year-old car, 15-year-old car. It's a 2008 Chevy Silverado, got 190,000 miles on it, and gonna continue to drive that thing until it dies. So, because
I did that.
I'm anti car loan. If you can't buy a car cash, you can't afford it. And I mean, I could go buy a car cash right now and get rid of my truck, but I don't want to, because the truck's gonna get me from point A to point B, same as what a new $80,000 truck, or a $20,000 car. It's like they get me from point A to point B, and that's all I need right now. So
Yeah, that was really very much my mindset before, until things started to break down, and it was costing like it was repairs, like it would be like the engine, or it was the transmission, or just little things would add up. So like sometimes it's just crazy. Like sometimes like your whole car could tear up with just a little nail. That happened with me with the Mazda. I was delivering, and then I felt my tire weird, and I was like, what's going on? And I pull over, and the entire tire was like ripping off. Like you could see the seams from the inside. So I was like, I was pretty far, and I was nowhere near like any tire shop, and I had went to this gas station, and because I seen that they had some, but it didn't fit, so I had to drive Orange County all the way back to Long Beach, and I had found one used tire that fit. It was like fairly new, like it was pretty much new. He shouldn't have sold it for the price that he gave it to me, but he did, and it worked out. And so yeah, but it's just little things like that will happen. It's little things that will happen, like with used cars. Got to fix the shocks on my car, and then I had to fix the entire the axles on both sides that messed up, and then my coupe, it had caught on fire out of nowhere. And I was driving it, and I didn't have no modification. I'm not really a street racer type of person, but the whole engine just, yeah. And I was like, but I feel like that mechanic, like he was trying to get money out of me, because he had did the axles. I think it was like a few days before, and then when that happened, I was like, heck, like this is weird.
just worked on it, and then your car went into flames a couple days later.
Yeah, it made no sense. And so it ended up being some other stuff, and I was like, whatever. So I was like, I can't deal with this no more, which is why I went with the newer car. Like I didn't want a car note, because I already know how that is, but I needed something.
Leasing a car is just as bad, I would say, as a car note. I mean, it's you're paying them for something, and I mean, some people like leasing because they can do it for 3 years and get a new car. But I mean, my opinion is, I don't want the bank, I don't want the dealership, I don't want to be paying them every single month, $400, $600. I mean, the average car payment in America right now, average new car payment is like over $700 a month, and I can't imagine just every month $700 coming out of a bank account just to pay for a car that's sitting in my driveway. And I mean, it's just not worth it, frankly.
Yeah, I found that out. Found that out. I would have just done financing. I would have had the car, and honestly,
And if you had done that, you could have paid the car off, frankly, with all the crypto stuff that you made real quick. I mean, granted,
yeah, but it was just like the whole mindset was like, you need to have credit profile. So that's what it was said. But with the lease, they have said there's no reason for you to try to pay it all off right now. They said wait till the lease is done. Okay,
more money for them.
Yeah, like I didn't know this.
They're not acting in your best interest. They're acting in their best interest of their pocket. So
I didn't know all that.
Well, let's so now you don't have a car. Trying to figure that out. Figure out what your plan is moving forward there. My take would be stack as much cash as quickly as possible with these work from home opportunities that you're working on, and go buy a car cash, and then that way you don't have $400 a month coming out of your pocket going towards X, Y, and Z, and you can be using that money on other things. What other debts do you have?
In reality, I don't have too much anymore. I've been getting my credit repaired, because it did take a toll once, because when I was in my car, like a lot of things dried up. Like I didn't really have any money like that, and the little crypto money that I had like left, it was like I was using it because sometimes like I wouldn't have enough to pay for my car note. So because Amazon work dried up, it was really like lowering down a lot, and so it was just money, food, and eventually so I started using my credit card. So that's when that debt built up. It built up and built up, and I was paying it.
How high did it go?
I think I had maxed it. It was a 3K.
So you went from 20 grand in your pocket with crypto to making trades, so you made losses on it, so you had less, and then went through all that money during that time where you're living out of your car to max out a credit card, $3,000. Definitely, I guess, a dramatic shift of events over the course of a few months from.
Oh yeah, it happened so unprecedented, but it's okay. You know, I didn't really flinch with it. I wasn't really like letting it.
The beautiful thing is you're young and you're making these mistakes when you're 24 or earlier, younger than 24. You got a whole heck of a life ahead of you that you can proceed in life and learn from these mistakes and not make them again. So,
And so yeah, so it's like not too much of a biggie for me. I mean, I kind of just, stay positive with it and just, you kind of learn from it all. And then it's like, okay, like because of those things kind of happening with the credit, it made me dive into credit a little bit more. So I know a little bit more now than I did before. And so, it's just, it would have been better if I would have known those things a lot more years before. I could have taught myself, but with experience comes knowledge.
I mean, life's all about making mistakes and learning from it and not making those mistakes again. So, I mean, I made plenty of financial mistakes in my life as well, and I've learned a heck of a lot from it. And no, I'm not going to make a lot of those same mistakes ever again. So
yeah, and you know what? I felt sometimes like I was reading Napoleon Hill's Outwitting the Devil, and there's a section where it mentioned how sometimes people who come into like great amounts of wealth don't usually know how to manage it. A person who slowly gets in, builds the wisdom along the way and the knowledge of it, they're able to manage it just a little bit better. But sometimes like they won't blow it as fast as the person who received it like instantly, like Powerball winners and stuff.
I mean, you're spot on. I mean, the statistics, I think it's like 70% of lottery winners go bankrupt within a few years, because if you go from zero to millions and millions and millions of dollars overnight and you've never managed that money before, you're not going to know how to use it. You're going to spend it on buying dumb things or giving it away to friends and family and buying you a house that you can't afford or whatever it might be. And if you don't know how to actively manage that in an appropriate manner, you can go from on top of the world to no money overnight.
Yeah, and that's
and that's why when you're saying, hey, I want to figure out how to, when you're doing the crypto things, how can I double 10x my money overnight? It's like, that's not realistic in the world to double your investments overnight and do that. I mean, index funds, S&P 500, I mean, that average returns 7% a year. So that's going to double every 10 years. That's more of a realistic goal of where your mind should be at in terms of investments, because that is proving out it's has a long track record. U.S. companies that you have ownership in versus, hey, how can I flip Shiba coin 10x overnight? Yes, there are people that are going to make money doing that, but there's going to be a heck of a lot more people that are losing everything under the sun trying to do the same thing. So
I just felt like if you have a game plan, because even with real estate, like sometimes it won't flip in time. Do a fix and flip. It might go past the 60 days. It might go past the 90 days. So at that point, it's like, I think it's just, if you go in with a game plan now and you're like, all right, like, I think that's why, like, sometimes people do limit trading. So when they do limit trading, they're like, all right, if it goes up to this, cool. But if it starts to drop, it'll sell. So I think it's just with a game plan, I mean, you don't know what's going to happen, honestly, because COVID is a great example to what happened to the world, and we weren't prepared for it. But I think it's just having a game plan. And I think it's like, it's all a gamble too, because like you go into the casino, you're not really, you're gambling, but it's
you're going to lose your money, because if you look at the casino, how big and beautiful and how much money they have there, it's not because they're losing money.
Yeah, no doubt. They play the long-term game, because you can win about 10, but if a person's intrusive thoughts gets over them, they're not going to leave that casino after they just won. They're big balling. They're going to drop. Like, all right, boom, let's play some more.
Yep.
So I think it's just a game plan and just knowing when to, pull out. Like, you have an exit strategy.
I would challenge you, read a book. I Will Teach You to Be Rich by Ramit Sethi. It's a great book, just talking about investing, talking about personal finance. He's one of my.
Let me write that down.
His name's Ramit Sethi, RAMITSETHI. He's a great author. He's got a great podcast, but he has a good book just based off of investing. Flame the Crypto Bros in his book and on his podcast, and his investing thesis is very strong and very good approach of what most people should be doing. Same thing Warren Buffett says, is like 99% of people are better off putting their money into a S&P 500 index fund than trying to sit here and pick individual stocks. I mean, it's very unlikely that you're going to beat the market over time trying to trade individual stocks, whether day trading, whether you're crypto trading, whatever it might be. The likelihood of that is low because there's so many factors outside your control in there. So I definitely think that'd be a good book for you to read and just learn more about investing, learn more about personal finance. He's a great author and great just figurehead in the personal finance world. So.
What was the name of the book again? I'm sorry.
I Will Teach You to Be Rich.
Will Teach You to Be Rich.
But check that out and read it. And let me know your thoughts when you read it in a few weeks. So
I will for sure.
Awesome. Well, we'll leave it at this. I got a couple questions left for you. What's one thing you wish you knew early about personal finance?
The very first thing comes to mind is credit and how, right? Because if you go to Macy's, get like some like personal loan, whatever, that credit is completely different from when you go and get like that credit line, that credit score, that FICO score is a lot more different from when you go get a car. Your FICO score is a lot more different from that. It's a lot more lower, whereas what you're being told on Experian or TransUnion or Equifax, it's a lot more different. And then when you go to buy a house, that's completely different. Your FICO score is a lot more different. It might be a lot lower. When I went to get my car, the FICO score was a lot lower than from what I was seeing. And the finance manager had explained to me that it's a lot more, what you have right there is just because you've bought small things. It doesn't compare to this big
large purchase. Yeah.
Yeah. So I wish I would have known that. At that point, I probably would have
never gotten a Macy's credit card.
Well, it was.
I would never get a Macy's credit card.
Sometimes you have to start from somewhere, but But yeah, I wish I would have just known that and known that another thing too, that your credit payment date is not the date you should be paying. You should be paying a lot more before the statement date. Because if you have paid that off before the statement date, it's not going to show your, the utilization,
yeah,
how much you used. And so if I would have known that, it would have helped me out a little bit more. And so I think just like the credit game, how important it could be. And my whole mindset before was just like, oh, it's debt. People are always complaining how they're in student debt. They're, credit cards, they still haven't paid. That's what I heard. It was like a fear tactic that got into my mind. So I wish I'd have known that. Also, like, I guess more things on stocks, right? Because I didn't really know too much other than what my teacher had taught me and what I kind of like learned in school. But it wasn't still like, I think sometimes teachers, professors, for their best interest is really more to make money, which obviously makes sense. But sometimes there's professors that care more about the students and sometimes they withhold information, and because they know a few things that they don't want other people to know or learn, or it took them a little bit longer. It took them trial and error, learning a few things about the stock market and just what it is and how it how it goes. Appreciated information like that, whereas to like, my whole mindset was like I didn't really know too much about short-term and long-term gain tax. I didn't really know too much about that.
Yeah. Well, read Meet's book, and that will give you a lot more context, a lot more information on index funds and investing for the long term, and expect returns of that. I mean, expect returns about 7% in terms of the S&P 500 accounting for inflation. And I guess curious for you, if you put $500 a month away into index funds that average 7% return for the next 41 years until you're 65, we'll call it. Do you know how much money you'd have in your investment account at that point? You contribute about $246,000 over the course of that 41 years. What would that value of that of those assets be at that time?
Let me get a calculator. Honestly, I don't know.
I'll tell you, $1.4 million. And that's putting in only $500 a month into index funds for the long term. And it's like, that would be a great spot to be in. And no, is it going to be your Dogecoin that 100X overnight? No, but it's also not going to be your Dogecoin that's going to drop 90% in value over the course of 6 months because of the crypto bubble burst or whatever happened, or it was a coin where the founder ran away and blew up, or whatever it might be. So read Ramit's book, and I think that will give you a lot more kind of knowledge into investing and index funds, and help you start formulating a plan moving forward as well. So
I'll give that a check for sure.
Well, Jovanny, we'll really appreciate you joining today, sharing your story, sharing your journey, and obviously you've had a lot of ups and downs, from making a lot of money off Doge to living out of your car for a few months, and really just appreciate you sharing that journey along the way. And feel free to let's be in touch in the future. If you're going to buy a new car and you're going to finance it, email me and I will talk you out of financing $20,000 or $30,000 worth of a car, because I want you to succeed. I want you to build wealth and not be tied down to a car payment for the rest of your life. So
appreciate it. Yeah, I appreciate you for having me.
What's up, everybody? We just finished recording with Jovanny. Heard a lot of his ups and downs and roller coaster of the last few years, from making a lot of money in crypto and day trading and with meme stocks, with Tesla, with Dogecoin, to living out of his car for 7 months, being homeless, and spending all that money. Definitely showcases the world that you can be on top of the world 1 minute and the next minute you're not on top of the world. And really appreciate him just being vulnerable, sharing that story with us. Hopefully there's lessons for people to take away in terms of what to do, what not to do. If you do come into a large sum of money, you need to figure out how can I allocate that money appropriately. Just like lottery winners, 70% of those people go bankrupt within a few years because they don't know how to manage that money. And I think it's just an important thing to showcase and learn from. That same thing can happen to anyone, whether they make $20,000 or $100,000 or $10 million on a meme stock or whatever. I don't condone day trading at all, but if for some reason you do that and you make money, make sure you take that money off the table and set yourself up for success. So really just appreciate him being vulnerable and sharing a story with us. And yeah, if you enjoyed this, make sure you hit the like and subscribe button. This podcast is free, so the best thing you do to support me is hit that like, hit that subscribe button, and keep on watching. So we'll see you next time. And if you want to be on the show, make sure you email me at the email in the description, and we'd love to have you on here. So whether it's a financial decision that's upcoming, whether it's trying to figure out how to get out of debt, whether it's planning a wedding or whatever it might be, I would love to have you on the show for us to talk and discuss and be open about finances. And yeah, appreciate you watching. So we'll see you next time. Bye.